cup of coffee with gold, but you can buy a cup of coffee with Bitcoin. No, you can't. You can't buy a cup of coffee with Bitcoin. In fact, it's probably easier to buy it with gold than with Bitcoin. I'm
going to use my Moon wallet, non-KYC, non-custodial, magic internet freedom money to pay for this coffee. I'm going to write a little note. I'm going to send. And instant final settlement. Muchas gracias.
It's the one and only DOGE. You know what happened with the DRE.
Cryptos are not currencies, full stop. Cryptos are highly speculative assets that claim their fame as currency, possibly, but they're not. They are not. I think we have to distinguish between cryptos that are those highly speculative, suspicious occasionally, and high intensity in terms of energy consumption assets, but they're not a currency.
Take maybe the other side of the argument on a friendly basis. This is not going to be confrontational, I hope.
A few minutes later.
And you've done horribly. You've been a horrible risk manager up until now.
Well, I don't care.
You have to. That's your fiduciary responsibility, is to be a good risk manager. Yes, it is, sir. As a money manager, it's your fiduciary responsibility to be a good risk manager. And you've done a horrible...
No.
So, FYI, guard. There's a decent chance that
I have a certain amount of money in Bitcoin. It's a small percentage of that which I have in gold, which is a relatively small percentage of what I have in my other asset classes and so on. And I think that that has the merit. It's an amazing accomplishment to have brought it from where that programming occurred to where it is in the test of time. On the other hand, if it's successful, it's going to not be, the governments don't want to have it successful. You don't want to have an alternative currency.
But we're starting to see governments like El Salvador. I know that's not exactly going to be the leading government on this, but there are governments that may take this on.
But no. You have El Salvador taking on, and you have India and China getting rid of it, and you have the United States talking about how to regulate it, and it could still be controlled. So that's
right.
what it looks
and
like. If you're El Salvador and you talk about your alternative monies, you know, it's a different thing.
Do you believe that regulation ultimately will make something like Bitcoin and other cryptocurrencies have a future, or do you think regulation will kill it?
Well, I think regulation, I think at the end of the day, if it's really successful, they'll kill it, and they'll try to kill it, and I think they will kill it because they have ways of killing it. But that doesn't mean it doesn't have, you know, a place, a value, and so on. But it's one of those things that has
it
doesn't have intrinsic value. If you put cryptocurrencies, or let's say Bitcoin, in the historical perspective, right? There are so many things in a historical perspective that were given that didn't have intrinsic value and have perceived value, and then became hot, and then they become cold. And so it could be either way. You just have to know what it is, right? I mean, like, it could be tulips in Holland, you know, and the intrinsic value. So what is the value? And then there are technological changes. I'm no expert on that. I'm just trying to say that you asked me what my opinion is. Take it for what it's worth. I'm no expert on it. I think diversification values, it matters. I suspect the real question that investors should be asking themselves is how much stuff like that do they have? How much stuff do they have? Do they have gold? Okay, should we be talking about how much you have in gold versus how much you have in Bitcoin? And do you have a diversification in those kinds of things that we might call intrinsic value money? Because we have a fiat monetary system, okay? With a fiat monetary system, where is your hard money? That's the question, and however you go after it, I think that's the question to be answered.
Okay, there's two other pillars
a debt
to
that you're holding. Currency equals a debt.
Right.
And it means that you receive something, and now you have no interest rate on it, and they're producing a lot of it.
Right.
Okay. And so it's the way out. It's ultimately the way out. Because if you keep it hard, you have a big debt crisis. And if you don't keep it hard, you don't keep it hard. So history's always been the devaluation. So there's a point of that. And they want that.
Right.
Because if you look at history, if they don't have that, but think about that dilemma. Just the fact that we're talking about the possibility of that dilemma means that you're going to want something else, and I don't see why one has to be. There's not even enough choices of those types of things. So we could take Bitcoin, or you could take gold, or you could take, let's say, the advantage of both of those is their money. You easily transfer it. It's very different than real estate, let's say, or equity.
I think the thinking behind crypto is good. I think that people are thinking about the problems of monetary interventionism, the problems of the risks to our banking system. I think that's underlying a lot of this. The problem is I feel like we've kind of killed the golden goose with speculation behind it. People think of crypto as sort of an antidote to these things that I'm talking about, the systemic risk. Or the speculative nature of the market, but I think what it really is more of a symptom. I think they've got that wrong. I think it's because we're in this credit boom that we're seeing something like this. There's too much liquidity out there. It needs to find assets. Crypto is one of those.
Speaking of crypto, let's also talk about SEC Chair Gary Gensler's testimony on Capitol Hill. He spoke in front of the Senate Banking Committee and faced questions on crypto oversight. Now, people had hoped that Gensler would be an ally for the crypto industry, perhaps even ushering in the first Bitcoin ETF. But his comments today made it clear he would rather see crypto regulated under the SEC, much like traditional stocks. CNBC's Bob Pisani watched the hearing and can tell you how it could change crypto investing.
Everybody thought that Gary Gensler was going to be the crypto golden boy. Everybody said, well, he taught at MIT. He taught crypto at MIT. He gets it. Well, he certainly gets it. But it's very different being a professor at MIT and being head of the SEC. Gensler is making it clear that he wants a lot more regulatory control over the crypto space before he approves any new crypto ideas. And that includes a Bitcoin ETF. And I think his concern is, how can I go out and, for example, say that I want a Bitcoin ETF to come into existence when I don't even have regulatory control over the ecosystem that exists? So essentially, Gensler has taken a step back and said, wait a minute, I'm in favor of new innovations, particularly around crypto. But until we have a regulatory scheme that's in place where we can monitor what's going on and figure it out, I'm not going to approve any new ideas. Now, the problem we have, it's not clear whether or not Gensler will have to go to Congress to seek regulatory authority to have control over the parts of the crypto universe that he doesn't have control over or doesn't have regulatory authority over already. It looks like Gensler is looking for very broad-based regulatory authority over many aspects of the crypto space. That would be both good news and bad news. It would be good news for investors. I think it would make the spaces secure and safe for potential fraud and ripoffs. On the other hand, it would make the crypto universe a lot less wild, wild west, as Gensler likes to say. That will make a lot of people disappointed who liked it because they had a chance to do whatever they want and potentially get rich very, very quickly.
Look, I have to say, Gary Gensler is a very serious guy on these matters. MIT educator, former professor on some of these things, was teaching classes on this. You're very serious about these issues, too, and yet you don't see eye to eye with some of these issues. You're both people I take seriously, though. What do you fault Gary Gensler on when it comes to some of these things?
Yeah, so if you listen to the exchange that I had with Chairman Gensler yesterday, a big part of it was the fact that the SEC has not laid out clear guidelines on what kinds of cryptocurrencies they view as securities, right? Their regulatory regime is limited to securities and platforms that trade securities. Well, if cryptocurrencies, or at least certain cryptocurrencies, are not securities, then the SEC doesn't currently have legislative authority to regulate them. Now, maybe you can make a case that we ought to change that. We can have that conversation. But here's what concerns me. Chairman Gensler will acknowledge that, say, Bitcoin and Ethereum certainly are not securities. Certainly they look more like commodities. He'll acknowledge that. But then he'll say that stablecoins pretty much are securities. But if you ask me, they don't actually meet the test, the legal test for what constitutes a security. So I'm just asking the SEC to provide some clarity. Let us know. Why do you think this is a security? What are the characteristics of a cryptocurrency that make it a security so that people will know? And then let the laws, enforce the laws. Maybe we need to make some changes. I'm not in the camp that thinks that there should never be any kind of regulation over any cryptocurrency. That's not my position at all. But I do think there needs to be transparency and objectivity about what we're doing here. And the SEC is taking enforcement actions without first having laid out how they interpret, how they apply existing securities law to this really, really important and innovative new category of finance.
Innovative it is, and it's been hard for the regulators to keep up. You understand that, it often is hard for regulators to keep up with the pace of innovation. He makes a point in saying it's the wild, wild west out there. I mean, we saw earlier this week the Litecoin situation, that fake release that went out and said that Walmart was going to start accepting it. And it does make you look at this and say, hey, maybe there is some regulatory oversight that's needed, and maybe it'll take a little too long. I can kind of see him laying down his place markers as a way to get to just a signal that, hey, there's something coming, so you better sit up and pay a little more attention.
Yeah, look, I think it is a little bit of the Wild West, and there's no doubt some of these projects are going to end badly. There's some of these projects are offering returns that don't make sense to me. It's hard for me to imagine how they are sustainable. All of that, I think, is true. But I think it's also the case that the SEC owes Americans generally, and certainly everybody in this space, the transparency of saying, here's how we're looking at this. Here's why we think this category is a security, and we're going to regulate it as such. These are not securities, and they have to either be unregulated or regulated somewhere else. You know, the cash market for commodities are not federally regulated. CFTC regulates futures. The SEC regulates securities. Of course, we have multiple bank regulators. But, we've got to sort this out, and we ought to have transparency before we go with enforcement.
Let me ask you about one issue that came out. Let me change it around and do it this way. What do you agree with Gary Gensler on? Are there areas where you say, okay, he's right on this?
I think there are certainly products that are being offered that look an awful lot like securities or mutual funds or money market accounts, and there ought to be comparable regulatory regimes over comparable products. I think Gary Gensler and I would agree with that. We agree that some of the most popular cryptocurrencies in the world are certainly not securities. Bitcoin is not a security.
I have two questions. One is specific and the other very, very general. So I'll start with a specific. In your previous tenure at the Commodity Futures Trading Commission, you were an advocate of providing no action relief to regulated financial entities within your jurisdiction. Now, over the last few years, the SEC has not provided no action relief to innovators, in my opinion, nearly enough. The SEC has also provided 21A investigatory reports on matters of general interest under the Exchange Act. What would you say to innovators who are nervous about approaching the SEC? And how can you improve the use of no action relief and other public statements like 21A reports?
Senator, I thank you for that question, and thank you for our continuing dialogue about innovation. I do think that Congress gave the SEC important authorities, not only to do what you call no action letters, but exemptive authorities and the like. And so I have said, come in, whether it's in the cryptocurrency space or in other innovative spaces, come in, talk to us and see if our rules for custody, for instance, which I know we've talked about, or transfer agents or something, don't quite fit because they were written in a bricks and mortar time and now we're in a digital time, let's talk about that. If we need to go to Congress, but maybe we can cobble together something. We did this in money markets in the 1970s. Good people in the state of Pennsylvania, Senator Toomey's state, came into the SEC and sought authorities to do money markets, and that's now a $5 trillion asset class. So I think there's room here to sort things out and try to figure it out, to keep things investor protection focused, but to sort out the new innovations.
And my adjunct question is the general question just about innovation. Do you support responsible innovation?
Oh my gosh, yes. I mean, it's brought us these lights in the room. It's brought us this ability to have a hybrid hearing with your fellow members. I mean, innovation is what supports access, economic activity, and gives so much of us better opportunities in life.
So, given that, how do you right-size the protections that are within your ambit to innovation generally?
No, it's an excellent question that I'm sure this committee grapples with decade after decade. I think it's the core public policy framework around ensuring that the public's not defrauded, that somebody's not misleading them and lying to them, to ensure that if you hold somebody's asset, you don't misuse it or abuse it, so to speak, the physical asset. And then on trading platforms, at the heart of our 1934 Act was that competition basically drives to more efficient market, and people don't manipulate that market, don't front run, for instance, in those markets. And I think that these basic tenets of anti-fraud, anti-manipulation, but pro-competition lower the cost of capital for companies raising money and innovators and entrepreneurs, even if they're using, for instance, cryptocurrencies and the like. But I think that inside that policy envelope that we have is a great deal of opportunity. I think it's at the heart of our economic success these last 90 years that we have deeply market-based economy. I said we have the largest capital markets in the world, almost 70% greater than our economic share, 38 points versus 23 points. There's a reason, and I think it helps our economy, but it's also because it's regulated, anti-fraud, anti-manipulation.
So what gaps do you think exist, and what additional regulatory authority would be useful, both at the CFTC and at the SEC, specifically with regard to digital assets?
I think that we have a great deal of authority. I think there's more clarity than some members on this committee. I mean, I know we're maybe a little bit different on that. But I think that in terms of the gaps, we have a great deal of clarity on, I think, what's a security. But the gaps is the coordination amongst our agencies. So, for instance, the coordination with the banking agencies on stable value coins that Senator Toomey raised earlier. The coordination with my sibling agency that I was honored to chair, the Commodity Futures Trading Commission, on the tokens themselves and the platforms, because to the extent something is a commodity, even the CFTC doesn't have regulatory authority, they have enforcement authority. A wonderful piece that Dawn Stump wrote recently that I thought was worth reading. But working together with the CFTC and how to coordinate. And then there's some in the, I would say, infrastructure side, things around transfer agents, custody and the like, that I think we could work with Congress to help clarify.
Now let me turn to cryptocurrencies. And my time is limited, so I'm going to try to do this as efficiently as I can, Mr. Chairman. But I think I know your position, among other things, is that not all cryptocurrencies are inherently securities, right? That's true.
There are a small number that aren't, but I think that, as Chair Clayton said when he was in front of Congress, I think very many of these facts and circumstances are investment contracts.
So here's my concern. So some are and some aren't is basically what you're saying. And I'm concerned that the SEC has not provided sufficient definition and explained how it would apply the Howey test, which I think is the court standard for determining when something is an investment contract. So, for instance, stablecoins do not have an inherent expectation of profit. They're just linked to the dollar. Now, you might use them in an attempt to make a profit, but that's a second-order activity. Is it your view that stable coins themselves can be securities?
I think that, Senator, they may well be securities. As Thurgood Marshall wrote in the Reeves opinion, in defining the scope of the market that Congress, wished to regulate, Congress painted a broad brush, and it actually included about 35 different things inside the definition of a security in the 33 Act.
I've just got limited time here, so I acknowledge that. Here's my problem, though. I think what you just said was that they may be securities, or that some are securities. To me, a stablecoin doesn't meet the second prong of the Howey test, that there has to be an expectation of profits from the investment. And so if it doesn't meet the Howey test, it looks to me like it's not a security. Now, maybe you've got a good argument for why some are and some aren't. My whole point is, I think we need to have clarity on this. I think you should publicly disclose this. Apparently, there are private conversations where you work with people who are proposing particular structures and you give them advice, or your staff gives them advice. I just think we ought to have that publicly, and we certainly shouldn't be taking enforcement action against somebody without having first provided that clarity.
Well, Senator, this Congress could change the laws, but the laws that we have right now have a very broad definition of security, including a note, including an investment contract and the like. And my predecessor, Chair Clayton, and others actually put out a lot of guidance with regard to the Howey.
I just got to push back a little bit on that. It is broad, but it's well defined. There is a very specific litany of the instruments that constitute securities. As you know this better than I do. Investment contract is one of them. And there is a court decision that lays out the prongs for what constitutes an investment contract. I'm just saying, as a layman who can read English, when I read those tests, stable coins don't seem to meet that test to me. Maybe I'm wrong, but if I can misinterpret this, I think others could too, and some clarity, public clarity, I think would be helpful.
I see the red light, but I agree with you that some of these tokens have been deemed to be commodities. Many of them are securities, and the Supreme Court has weighed in a number of times. You noted the Howey test. We've talked about the Reeves test was in the 1990s as well, has weighed in, and I think that there's a fair amount of clarity. Over the years, the SEC has even found, believe it or not, whiskey caskets, and the courts agreed in the 1960s were investments. And I think that at the heart of our securities laws was protecting investors against fraud. They get to decide, they get to take the risk. You'll find I'm not negative or a minimalist about crypto. I just think it would be best if it's inside the investor protection regime that Congress laid out.
Down the rabbit hole of magic internet money, you cross into a virtual world of unlimited possibility, scaling in layers to grow the network exponentially, unlocking micro-value peer-to-peer streaming globally. Verify, scrutinize, open source for transparency, run a node, enforce the code, secure your own key and privacy. Simple protocol, unchangeable, built just to keep time. The whole world knows what's yours is yours, and what's mine is mine. Understand it fundamentally. You're now enforcing scarcity. 21 mil captures vast demand for its utility. The science behind NGU and savings technology without middleman corrupting price signals for our certainty. Stars align to mass adopt enhanced survivability. No point of failure leader compromising its validity. From coders to miners, all disperse universally. United by the flywheel that keeps spinning for eternity. Stateless money takes away power from unjust tyranny. No longer can oppress people by debasing their currency. End the reign of overreaching monetary policy. Each decade causing crisis crises taking lives from countries globally. Road to serve and paid by sweat with little to show. So we rally for our freedom to long last overthrow a broken social contract that led few to discriminate. In its place, we evolve how our species coordinate. We mathematically transmute energy to digital gold, thermodynamically bridge physical with digital world, traversing value through space-time with mass energy, Kardashev scaling civilization beyond our galaxy. Down the rabbit hole of magic internet money, an idea so divine fueled by unstoppable gravity, in a state of nothingness, possibilities infinite, a blank slate to create from boundless human ambition.